Well, it's a massive crack actually on the SENSEX on the pre-open rates of 2,300 points, and for the Nifty as well, looks like it's a fairly shaky start around the 13,200 mark, off by about 1% or so. But in the meantime, let's connect with our chartists yet again to find out their mid-cap trading strategies as well. And Naresh, what is it that you're spotting on the charts?
So we are looking towards a bounce back trade in National Aluminium NALCO, which took a 10% downtick yesterday in the momentum and continued to close around 10% lower. The last breakout point was around 38 odd levels. So we would keep that as a stop loss and a target price of 43, 45 in the short term. What we've seen is whenever we've seen such downticks in the Nifty of 3% in the last 3 months in August, October, we've seen a recovery of 3-4 sessions. So this is a trade with a view of the next 3-5 sessions.
And Kunal, your mid-cap recommendation?
It'll be a sell on Apollo Tyres. The stock clearly showing signs of weakness yet again, and I believe that it's possibly likely that many of these mid-cap names would go through a downward drift over the near term. So a sell on Apollo Tyres, targets to be kept at 165 and stop us at 183.
Devendra, Reliance yesterday hit a low which was sub 1900. Would you wait for that level again to buy into Reliance, or at this level also Reliance is good because it's like what, down more than 10-12% from its recent high?
So Nikunj, I think the next level of trigger for Reliance, I think stays with the O2C company, where I think the Aramco's deal probably is expected to get materialized. Fortunately, I think the global market, the crude oil prices are showing the steady trend. And as I see it, I think $48 to $54 kind of a price, I think would be, a steady range in which I think this price could possibly, crude oil prices could find its value. If that is so, then in such case, I think the Aramco deal probably which got shifted to the later quarters, I think is likely to get materialized. So that is one positive news, which is basically likely to be experienced, I think, somewhere in January, March quarter. Should that be the situation, every fall in the price would be a buy opportunity. Whether you would get, I think, below 1900 price and then you will buy, I don't know. But to me, I think the company looks fundamentally sound. From the trader's perspective too, I think every fall in the price, I think, would invite fresh money into this stock. So certainly, I think the correction of a sharper degree would be a better opportunity to add from the trading perspective as well into this stock.
In the pre-open session, even though SGX was up, the pre-open session, the rates are not looking all that encouraging. Naresh, how should a trader read into it? SGX super hai, pre-open rates are down.
We would expect a bounce back. That has been the case every time we've seen a 3% downtick. We saw it on 31st August. Again in October, we recovered almost 50-70% of the move in the next 3-4 sessions. So the view is we can go back to 13,450 to 13,550 odd levels in the next 3-4 sessions. Unless we cross that, say 13,600, 700 mark in less than 4 sessions, then we again go back to positive. But this is a pullback and then we go into a pause. So for now, yes, today we expect a bounce back and it could get sharper on the upside rather than on the downside.